Hey guys, what's going on? Just wanted to do another quick video today. Wanted to talk a little bit about finance, obtaining financing for your vacant land or property that you're trying to get a hold of. I'm not going to touch too much on anything that would have like a single family home on it, since the channel is pretty much about vacant land. I don't want to get too far off. So basically, I mean, I probably should have done this video before I even started talking about realtors, because technically you should be pre-approved before you even really start shopping or anything like that. Because if you don't know what you can afford, then you probably don't want to go look at, you know, a $200,000 piece of property when you can only afford a $150,000 piece of property, and realistically you only want to spend $100,000. It's all about figuring out where your price point is, and then also kind of mapping out what you intend to spend. Of course, if you plan to build on it, how much is that going to cost? So there's a lot of planning that's going to go into that, of course. But I mean, it all really comes down to kind of, you know, it's rough ideas. That way you can kind of put yourself in a good spot. You obviously don't want to put yourself in a scenario where you're going to be underwater trying to afford something that's just not realistic for you. So what I did is I actually got a referral from a friend of mine. We went through a company, a bank, basically credit union. It's called Greenstone Farm Credit, I believe. They are Michigan based. I believe they only lend in Michigan, but it's basically like, they look at it as if it was like an agricultural type property, farm, if it's just vacant land, things like that. That's what they specialize in. They even do stuff with like small farm businesses, stuff like that. So it's kind of a cool place. Not something I'm super familiar with. I've never been in that space, agriculture or anything like that. But it is kind of interesting that that's out there. You know, there's this type of financing available. It's not just like a personal loan or something. But, you know, I can only speak to their process because that's the only one I've ever been involved with. But it's very similar to what I do every day with the normal mortgage process. So pretty much I gave him a call, gave him an idea of the property that I was looking for, let him know like kind of a rough idea of where I thought I would want to be. And at that point they said, okay, cool. Let's get you and your wife signed up. We're both going to be on the loan, both going to be on title, all that fun stuff. So, W-2s from previous year, pay stubs, 2 most recent pay stubs. That way they can track what your annual income is going to be, figure out what you can afford versus your debt, which they're going to pull a copy of your credit to see what your financial obligations are, so they can compare those two, figure out what you can afford, right? So what happened with that? I mean, I kind of think I try to stay pretty low. We probably maybe could have went a little higher. But I know when we decide to build that, you know, it's going to add up quick. So I wanted to be conservative. We didn't want to spend too much on the land. So, we were perfectly okay with taking some time to find the right one, if that meant that, you know, we could maybe spend a little less. So we obviously didn't take very long. We only looked at a couple properties, but we'll talk more about that later. So yeah, really easy. Basically, went through all that, got them bank statements to show where our down payment was going to be. Typically with most land loans, they require at least like 20% down. The cool thing with Greenstone specifically, sorry, the dogs are playing with like the loudest toys ever right now. But basically 20% down, and then from there they offer up to a 30-year mortgage, fixed rate. So, I mean, really all in, the interest rate wasn't too bad. Definitely a little higher since there's no like tangible home on the property. But I mean, that doesn't mean that it's not worth something, of course. There's just like, there's no single family residence there, or condo, anything like that. So it's a little different. It's not quite like a personal loan where there's no skin in the game, but it's just a little higher risk for a lender. So the interest rate is slightly higher. And of course that's based on your credit and your income and all that stuff anyway. Bruiser, hey. He's so loud, man. But yeah, so all that stuff is based on your ability to repay. So if you're a little higher risk client, you might pay a little higher interest rate. They might not offer you the full 30-year, anything like that. You know, Jen and I both have pretty good credit, so we weren't too worried about it. But at that point, we were pretty confident going into it. You know, we were gonna get what we wanted and what we needed. So basically got that pre-approval letter. Once we got all our bank statements and everything into the lender, they were able to pre-approve us, I believe, like next day. So that pre-approval is basically like a letter in your hand saying, hey, like, I'm serious, I can afford this property that I'm like writing you an offer on. If you decide to make an offer on a property, it's kind of like, you know, I don't want to call it like street cred, but it's kind of like, hey, like, I've got the backing, here's my paperwork, you know, check it out, I'm legitimate. If you are okay with this offer, that is the price I am intending on paying. And the other part of that too is, so obviously all that is really kind of making sure you have the buying power to get what you want first and foremost. And then the other part of that is making sure that you have your realtor and your lender working hand in hand. So the realtor has all the info just in case there's any questions as far as closing, title, just like, you know, the wire transfers and things like that, all the mortgage stuff. The realtor and the lender can kind of handle that hand in hand. But at that point, Greenstone, like I said, I work in the finance industry, specifically within mortgages. They were super easy going, answered all the questions I had, which, you know, I shouldn't have many questions, but I had a good amount, you know, just probably because I know all the fun lingo and stuff that I read through the docs every day. But yeah, they were really good. You know, their website and everything is pretty good. You can set up your auto pay, just like normal. I say the big difference between like a regular mortgage and something like a land loan is typically you're gonna end up paying your taxes and things like that separately, so on your own. So with like a mortgage of your home, you will have the option in most cases, if it's conventional, to pay your taxes and insurance on your own. Sometimes you will have an escrow account that will basically, they'll like take a certain amount per month, goes into the escrow account. They end up paying your taxes and insurance out of that when they're due. That kind of is like, not dummy proofing, but it kind of dummy proofs it, so that way you don't even have to think about it. Your lender feels better. Sometimes they even give you a discount if you have an escrow account. They call it in-pound account. You might hear it called as well. But sometimes you'll see that on like a standard mortgage for a single family home. But that's not something you'll typically see for like vacant land until at least you do your construction loan and then have your normal mortgage back. So, but yeah, Greenstone, like I said, if you're in Michigan, they're pretty awesome. Definitely highly recommend them. I talked to a gal named Sandy. She helped us out. She was awesome, super knowledgeable, took care of us great. Can't speak highly enough of them. But otherwise, the financing portion is not a super scary thing. It's really making sure you have all your documents in place. Never hurts to have your taxes handy. If you're self-employed, make sure they're filed. The one fun thing about being self-employed and applying for financing is that you only qualify like whatever, like if you say I make however much a year. If you say I make $150,000 a year, but you only claim taxes on say $50,000, you say I write off $100,000 to vehicles and travel and stuff like that. You only claim $50,000. You only pay taxes on that portion. Basically, is how that kind of works. You're only going to be able to qualify based on that $50,000, because if you say that you're writing those things off because you use that to pay other things, you're saying that's money I don't have, is kind of what that says to a lender. So keep that in mind when you're filing your taxes. Write-offs are great and things like that. But if you're trying to kind of beat the system like that and kind of skimp out on your taxes, it's not always a great thing when you are trying to obtain financing. Because if you can, if you say, again, you make some exorbitant amount of money, but you only claim a small amount of that just so you can, skimp out on Uncle Sam, that might come back to bite you when you're trying to apply for financing. So just keep that in mind. Having your down payment sitting in the bank, they call that being tangible. Having mattress money tucked away is an okay thing. If you're paying cash for the whole property, sweet, like more power to you. Obviously that's kind of the way to go if you have that kind of capital and can spare it. But it is something to kind of keep in mind that, if you say you make this much, make sure you're claiming that much, just because that's what my bank account says doesn't mean I'm necessarily, if I own a business, it's not very common for everybody to say, okay, I made $150,000, I'm paying taxes on $150,000. It's very common to see that kind of whittled down, so that way businesses can kind of get a little bit of a break as far as taxes go. So not a business owner. I just see it fairly often within what I do for a living. So keep that in mind. But like I said, Greenstone, I think it's like Greenstone FCS or Federal Credit Union, Federal Credit Services, Farm Credit Services. That's what it is. Awesome. Call Sandy if you're in Michigan. She'll take care of you. Everything all online, stuff like that, through email and over the phone. Super, super easy to deal with. So yeah, that's the finance portion. I will probably touch on finance a little bit more at some point, just because I can kind of, hopefully set some folks up for success as far as like preparing. Maybe it's saving money, paying off debt, stuff like that. I do have a lot of experience in that. So maybe I, at some point, will, like on a rainy day, do a video like that. But until then, that's the financing portion of it. Not sure exactly what we're going to do next. Maybe we'll start talking about things to look for when you're researching properties. That was definitely a real big one for us. So till then, go ahead, please like, subscribe, share it, get some folks in front of these videos, and hopefully start helping some folks out. So talk to you soon. See ya.